Today's conversation is sponsored by First Generation Capital Partners.
Be consistent with your actions. Pick little 5-minute tasks that you can repeatedly do over and over and over again every single day without fail, and you'll be surprised where you'll be at the end of the year.
You're listening to the Going Long podcast with Billy Keels, the #1 podcast for long-distance real asset investing.
Welcome to the Going Long podcast. We're back once again to continue to help to educate you so you feel much more comfortable as well as confident investing beyond your backyard. Yes, I'm your host, Billy Keels, and I am super excited to welcome you back to another awesome conversation. So today you're going to get a massive amount out of this one, I'm sure, especially if you are a highly paid IT sales or sales leader. Check it out. Definitely listen to this one. There's a lot of nuggets in here for you. I want to thank each and every one of you that continues to listen, continues to download, continues to share with others. Podcast continues to be ranked in the top 1.5% of podcasts globally. And there are so many more podcasts that are coming on. So thank you very much. If you already left your honest written reviews rating, thank you. If you want to do that, if you haven't yet, we got a simple video. You can do that here. Just click the video, leave it on the Apple Podcast platform. Spotify would be awesome. And thanks for tagging us and sharing across social media. It means the world to me. Also, if you want to check out any of the previous episodes, and we're well into the 300s now, just go to firstgencp.com/podcasts. Once again, it's firstgencp.com/podcasts, and you can check out every single episode. So listen, and I know I've kind of already told you before, but if you are someone who is working at a big company and you are still trying to figure this thing out, like how can I make these real assets work for me? Well, today, me and the guest, we're going to dive into a couple things. He's even going to share a couple of his methodologies with you that I know are going to add a lot of value to you. So we're going to get to that conversation with Mr. Matt Fore, and we're going to get to that just after this. So if you really want to be able to take the lid off of your earning potential in long distance investing and take your game to the next level, then guess what? Today is the conversation you're going to want to listen to until the very last word. I promise. You know why? Because today's guest, like literally, you just hold on to your seats here, has had over a decade in sales and sales leadership for some of the major, largest IT companies in the world. He was also able to find his focus and his why and was able to achieve his personal goals in less than 5 years. I really want to hear about how he did that. And you know, aside from enjoying things like reading and adding value to others, today's guest is also training for an Ironman, if he's not already done it, or half Ironman, but he's training for an Ironman, which I actually want to hear more about that. And he is a partner at Next Level Income. It gives me great pleasure. Oh, one other thing. You know what? He's also the host of a pretty cool podcast. And the podcast is Ice Cream with Investors. Give me great pleasure to welcome to today's conversation, Mr. Matt Fore. Matt, welcome to the show, man.
I swear you're like my own Flavor Flav. That was probably the best intro I've ever heard.
Did you like that?
I liked it.
You may have lost a lot of people, man, making the Flavor Flav kind of reference. Some people know why. Anyway, that's it. No, I appreciate that. No, man, I'm so looking forward to having this conversation with you, man, and just really having you share your knowledge with the Going Long family. Matt, you kind of know the format already. You know, I'm going to ask you 2 questions in the beginning. I'm going to ask you 3 in the middle or in the end. In the middle is what I don't really know how many questions I'm going to ask you. But as long as you're ready, I'd like for us to just jump right in, man, and get the Going Long family to get to know you. Are you all right with that?
Let's go.
All right. Question number 1, man. Help us understand, where is it that you call home?
I call home in Nashville, Tennessee.
Is it Nashville or Nashville?
Nashville. That's if you're familiar, you're from, or you know where Cincy is. Louisville. Yeah. The visitor center has Louisville, Louisville, Louisville. It has like all the different pronunciations around it. It's kind of cool.
All right. I love that, man. I love that. So in question number 2, I love positive stuff, positivity, positive energy. Help us understand, what is the most positive thing that has happened to you or for you in the last 24 hours?
A little proud parent moment over here. So I'm going to extend it out to 48 hours. But over the weekend, we were trying to teach our 6-year-old son about money, how to make money, how to save money, and all this sorts of things. And so he really wanted this smartwatch where he could call us. We would know where he's at. He could text us GG. He could FaceTime people and all that sort of stuff. And so we said, hey, if you want the watch, you got to earn it. So for the past 3 weeks, he's been doing chores. He's been making $5 per week. And then if he saves the money and doesn't spend it, we add $1 so that we can teach him the idea of saving for something. Well, he was a little disappointed with how long this process was taken. So he's like, what else can I do? And that's where we came up with the idea of doing a lemonade stand. And Billy, in 1 hour, he made more money than he made the previous 3 weeks of doing chores. And we talked a little bit about adding value, customer service, telling people what you want, telling them why you're doing it. And it was just such a proud moment for me as a parent to see him go out there, take the initiative, add value to the world, and then ultimately achieve what he wanted, which was to get that smartwatch. Wow. So that's what's my positive story for the past 48 hours here.
Fantastic. So he actually, at 6 years old, right? You said he's earned, that's right. He's understood the power of adding value to others, compound interest, and then also that it's really not just about the money. It's about what is it that you were looking to achieve.
That's right. That's right.
Man, I love you sharing that. And listen, all you parents out there, I mean, Matt just left already like platinum positivity. So that's a lesson for your children, whether they're younger or older. But hey, listen, thanks, Matt. I appreciate you sharing that. Listen, I'm going to let you in on a little bit of a secret that everybody here at the Going Long family already knows. I'm a recovering perfectionist. So I try to do things that are like impossible to do because it's just like a genetic thing. I don't want to call it it's just a genetic thing, right? So what that means is I try to do things that are impossible, like I said, and like to try to tell your entire backstory. And I don't know if I try to do it in like 1.5 seconds, that was never going to happen. I almost forgot the podcast and all that kind of stuff, which is something that we definitely don't do here. So I'm telling you that because, well, it's just what it is. And then I'm also going to ask you for some help because I guess since I'm sitting on this side of the microphone, I'm allowed to ask as the host for you, number one, to tell your backstory, Matt, in your own words. And you can take as much time as you need or want so that we can get a chance to know more about you. The one thing I'm also going to ask is if you could help to share some of the major decisions that you've made to get to this point in your journey. And then we'll see where you and I take the conversation after that.
Sure. So by way of introduction, like you mentioned, I've spent over a decade in sales and sales leadership roles at some of the largest technology companies in the world. And in 2015, I actually got started into real estate because we had landed a $10 million net new logo account. And I knew my eyes were huge and wide because I knew the commission check that I was going to get. And so that's what started me down this rabbit hole of trying to figure out, like, how was I going to invest that money? I was told things like bonds, crypto, stocks. And then I had a mentor at the time who said, you should look into this real estate thing. I own 3 properties here in Nashville, full and clear. I get cash flow, I get tax benefits, and they're going to appreciate over time. So then I read Rich Dad, Poor Dad, which led me to Bigger Pockets, which led me to all the different world of real estate. But then I got a fateful call on the week of Christmas from my VP at the time, who said I wasn't going to get that life-changing commission check, that I was only going to receive 2 cents on the dollar. And I asked him during that conversation, like, wait a minute, how did we come to that number? And Billy said, Matt, how much money have you made this year? And when I told him, he said, well, isn't that enough? And it was at that point where I realized if I wanted to pursue the causes that I cared about, if I wanted to live in an abundance, and if I wanted to give back to the causes that mean most to me, that I was going to have to find a different financial path. So what started off with one turnkey rental just around the corner a few months after that situation grew into a portfolio of 4,000 doors in the Southeast, 12 self-storage facilities, about 24 car washes, a debt fund, and 5 mobile home parks. So along the way, I'm happy to talk through anything from single family to kind of the business we run today, but I'll stop there.
Yeah, man. So, it's one of these things that when you start talking about certain moments in time, right? And you talk about 2015 and you make this eight figure sale, and you're expecting these big bonus checks. This is the IT world. Wherever you are on the spectrum, these deals, these types of opportunities, I like to call them, happen pretty frequently. And usually we get really, really happy because we start doing the calculations as sales leaders, like, oh, okay, man, this is going to be cool. We're going to do this. We're going to do that. Like your 6-year-old, right? We're going to do all this kind of stuff. And then, well, when you realize that 2 things happen, one, either the internal controls within the organization are always going to want to control costs. And then you've got our famous Uncle Sam that always wants to put his hand in your proverbial pocket. So you were able to learn a lesson in 2015, very fortunate for you to be able to do that. But at the same time, you had a mentor that talked to you about real estate, that had the 3 homes free and clear, and was able to, really start to show you the power of what was happening. Now, was this was a business mentor, right? Was also working in the same organization?
That's right. That's right.
Okay, cool. So I want to talk to that person specifically. This is like going to be a very specific question, but because we're so busy, or we tended to be, right? Because I did 26 years in multinational, and you and I have even shared some of the same, working at the same places. So we really understand certain mindsets. What was it like for you when you heard your mentor say, hey, I've kind of got this other thing going on the side, which is generating more revenue for me? If you can go back to that moment in time, what was your take? Like, what was your reaction?
Yeah, I never understood that people could do things on the side like that. And as I've grown and evolved over the past 7-8 years in the real estate business, I was told this the other day that really stuck with me. Is like, Matt, never be fooled. Everybody's got their own little side thing that they're doing, whether it's they're running their kids' PTA or they're investing in real estate. Everybody's got their little side thing going on. But as you mentioned, I'm an Ironman athlete. Like, I do Ironmans all across the world. And we'll talk about it in your last 3 questions. There are some of my favorite places in the world that I've done some races. But it was funny to me when I talk about doing these Ironman races and training 20 hours a week and how much it takes and, the effort behind it and all that. People were like, oh, wow, that's really, really cool. And then the second I switched that from Ironman to real estate, I make money on the side. Then all of a sudden it's like, wait a minute. What? You're not taking calls 24 hours a day. You're not fully available, all those sorts of things. So it was a healthy balance. And he kind of helped me see that, look, real estate, when done correctly, when you have a team around you, can be very, very passive and an opportunity for you to compound your wealth while still being intentional in your W-2 world.
Yeah. No, absolutely. And so when you actually got that reaction, you're thinking to yourself, well, okay, well, if it's tied to money, it's wrong. But if I'm training for my Ironman races, then it's okay. So I appreciate that the openness, the honesty, because it's one of those things where when you realize it later, I remember when I used to hear people, it motivated me. I was like, wow, how can you actually do that? Like, number one, I didn't even think it was possible because everybody that was around me was constantly running at the same frantic pace. And then when I realized, wow, you can actually create streams of income with something that you like doing, let me find out a little bit more about that. But there are others that just say, like, I can't believe you do that. Like you're saying, like, just stay completely away. So you find out about hard assets. It sounds like you didn't take any action at all, and somehow you've gotten to a goal, a life goal. Is that accurate?
Yeah, pretty accurate.
You just read a lot of books and listened to a lot of podcasts, and just then boom, all of a sudden things happen. Talk about the very first time that you decided to take action. Like, what was that like? Because once again, not just the study, not just the theory, not just the podcast, but actually putting cash down. What was that like for you emotionally when you were going through that? And what was it that actually took you to that point?
I'm going to give you a terrible answer and say it was fairly easy for me, because I had come off of this life-changing event where I thought I was going to get a life-changing amount of commission check, and trying to figure out what to do with it, to that being taken away from me with no power or no say-so whatsoever. And so I remember the first time I invested in a real estate deal, I had a lot of my friends, colleagues, my mom, who was like, hey, didn't you watch what happened in 2008? Didn't you see what happened in 2000 during the dot-com bubble? Like, that's super risky and all that sort of stuff. But my first property was $210,000. So I put down 20%, which was $42,000. And I'm like, let's put this in perspective. $42,000 is an MBA. Whereas this situation, I'm going to learn marketing, how to get tenants, maintenance, how to hire out property managers and different things like that. I'm going to get some leadership skills because I'm now managing a virtual team. And I'm going to understand a little bit about finance. I'm going to learn more about taxes and loans and leverage and all those sorts of things. So I think pain, we've all had our pain in life and our pivotal moments that have brought us to where we are. But pain can be viewed as something that's done to you or done for you. And I think pain, when viewed in the right lens, can help accelerate you to wherever you were supposed to be in your life. And that's how I should view this situation. That's how I viewed it.
All right. Well, you're running away from something or running towards something. I think someone famous has written and also stated. yeah, it is about taking that situation and really looking at it and saying, okay, well, how is this? Why is this happening for me versus happening to me? It was one of those things that we've heard. So you take your action, you get your first opportunity. Everything happened perfectly. I mean, exactly as you thought it. I was exactly as all the podcasts said it was going to happen. Was everything perfect?
You know what? Terrible answer on that one. It did. I mean, it was in the right neighborhood at the right place, and it's accelerated its growth. My first person that applied for to be a resident there was working at the hospital. She stayed in there for 5 years. She took care of the property. She painted the walls. She planted a garden. She did everything correct there. The only issue I had on that property was an HVAC problem when we flipped over to winter. And I got a call at 10:30 p.m. at night, like, hey, I'm cold and the HVAC won't work. And I had to go solve that problem. And it was at that point where I'm like, okay, I don't want to have a second job here. I don't want to receive these calls right now. So let me hire in a property manager. Now, I'll say that property went very, very well, but I've also had some learning lessons along the way as well that we can talk through.
Yeah, well, we're definitely going to do that. But this is one of the things, Matt. So my very first property started off really, really well. And it motivated me so much to take action even sooner than I had anticipated, right? Because it was like, my gosh, this is so easy. This is so fast. This is so perfect. And my bank account, oh my gosh, this is amazing. And then the second thing happened. And then the third purchase happened. And then eventually, well, I kind of rested on my laurels, I think is what we like to say in English. But tell us about the first challenge that you had beyond the HVAC.
Yeah. So in that property, it wasn't anything, but to your point, like, I think it motivated me to continue to gobble up properties. And I ended up buying 3 that year. The third one I purchased is where I started seeing, oh wait, there are going to be issues that happen with this. I bought it as a wholesale for 80 grand, took out some private money to do a fix and flip, and ended up burning that property. Where I got paid $5,000 to hold that property. But before I could get to that point, I had a tenant in there who I personally tried to evict. And then I got property managers to try to evict. And then it had to go through the eviction process through the courts. And that process ended up taking 3 to 4 months. And one of the things I learned during that process was if you inherit tenants, usually they're going to be the worst tenants you ever have. So this one was a family member of the previous owner who hadn't been paying rent. And when we asked them to pay rent, was all of a sudden very upset at that. And while they didn't tear the place down on their way out, they certainly didn't clean up on their way out. So it was a little bit of a process and learning lesson there.
Yeah, it's pretty interesting, right? When these types of things happen for you, because as an investor, you start to realize, okay, well, everything's not going to be perfect. There's more actions that I'm going to have to take, and eventually, well, you start to learn and you start to grow. And also, it's helping others to realize. You said it took. Did you say 3 to 6 months?
To evict them? Yeah, that one took like 4 months, I think.
Okay, 4 months. By the way, you are still working. At the time, you were still working in a full-time job that was relatively highly visible. So how was that, taking these kind of phone calls while you got this like massive responsibility, sales leadership kind of stuff? Talk us through that. How'd that have you feeling?
Yeah, it really gave me this concept of ROI in finance is return on investment. A lot of people think about that, but I've reframed that to return on intentionality. And what I mean by that is this action, can I be intentional with this action? Can I pay somebody to take on this? And while it might eat into my profits, I'm more intentional at soccer games, at lemonade stands, at cheerleading events, and those sorts of things. So I think it was for the first time I realized, and I also listened to a podcast there around that same time where this guy was talking about, I always valet park. I never go look for a parking spot because it's not worth the frustration that I have and the 20 minutes it takes me to circle the parking lot only to be cut off for somebody else to steal your spot. It's just not worth it in my life. I'm going to pay the $10, $5 to go valet park and be on my merry way. And so I think both of those things kind of lined up at that time where it really started helping me think about this concept of return on intentionality.
All right. So you got your ROI, return on intentionality, helping people to also think about valet parking. I think this happens once you start to realize how valuable your time truly is. And I mean, for each individual, right? We place different values on it. You talk about being at the lemonade stand or being at the sporting events, whatever the case may be. I know I had a major event in my life that changed my perspective of the value of time, and that helped me. And so I guess it makes me think of really, as you start to put the value on your time. I know you've thought through a lot of these things, even so much to a point that, and this isn't just about time, but you've come up with methodologies and frameworks and things like that. But before we go there, what was it like going from managing the properties on a day-to-day basis while you're still working your big time, highly visible day job, to also recognizing that, hey, listen, you mean there's actually a way that I can do something very similar and I can keep working at my day job and somebody else is taking care of all of the rest of this stuff? Because you talked about a lot of different types of assets and lots of growth that happened in, a relatively short period of time. But what was that like for the most important thing, which was your time as someone who was still at the time working in a very large multinational?
Yeah, I think it's this idea of effort. So one of the things I talk about is when we think about investing, we think about levels of effort. There's mental effort and there's physical effort. There's active effort and there's passive effort. And after I scaled my portfolio to about 10 units, I started then having the calls like, you've got an HVAC out, you've got a flood damage, you've got this property maintenance, this tenant's coming up for renewal. Do you want to raise rents? Do you want to lower rents? And while I was never physically swinging a hammer, I was having the mental burden of having to deal with a lot of those issues. And the level of effort you have to produce a financial result in real estate is hardly ever talked about. It's always, I've got this much units under management. I've got this much dollars under management and things like that. And I'm like, that's great, but you're not being intentional with your friends, with your family, and the things that you care about. So it was about that time when 2020, where I started investing more passively and trying to understand, okay, I might not make as great returns, but I am going to get better tax benefits, and I'm not going to have to deal with any of this overhead or mental burden that I'm carrying on me. So I don't know if that addresses your question directly, but I would encourage everybody as they're going through their own investment journey to think, when I take on this project, what's the level of effort that I'm going to have, both from a physical standpoint and a mental standpoint? And in my mind, if you're going to take on an active project, it has to produce 25% returns every single year, or else you're probably better spent not learning a new job, not dealing with a new project, et cetera, and going to do what you're already best at, which might be IT sales, which might be being a doctor, which might be being an attorney, and things like that.
Yeah, no, it absolutely makes sense to me. I love the fact that you're sharing with the Go Along family, which is really thinking about the not just the physical aspect of the effort, but also the mental aspect. And especially when you're making so many decisions during the day from your, let's call it 8 a.m. to, I don't know, if you're in Europe, 9 p.m., depending on which country you're living in. In the US, the same, right? Because you're either checking mails or your phone and all that other kind of jazz. It happens to the best of us. It's important to consider that that the mental effort that it is also taking you. So you talked about a couple of different assets, and I think it's really, really important because we also talk about real estate. There's a lot of different types of assets that are out there. I think real estate, what it did for me, Matt, and I'd love your perspective on this, and I think you've touched on it a little bit earlier. It helped me realize that it was more than just the 9 to 5. It was more than just guessing at the stock market, investing with my company because they gave me an X% discount. And so I justified it to myself that, hey, it makes more sense to put my money here than somewhere else. But it was that first, for me, it was a duplex. And that started to an area where, now it's not just that, but it's, larger multifamily. It's investing in commodities like in the oil and gas sector, of investing in things like ATM machines and all of these different types of things. But I'd love to know and share your journey as to how you started to be exposed to and really start to invest your time, effort, and energy into so many different, maybe someone would perceive it as so many different types of hard assets.
Yeah, a couple of things. One, so I grew up dyslexic, and I remember the first book I read as a child was when I was in middle school, and it was about the stock market. And for some reason, that just really interested me. And then whenever I graduated from college, I was asking all my friends kind of how they manage their money and all those sorts of things. And it would surprise me how many people didn't have a plan or didn't really understand what was going in and out. So I bring that up to say, like, I've always had this interest inside of me from a very young age that I never even knew was an interest for me until I kind of opened my eyes to real estate and seeing me not be able to receive the commission check that I earned and things like that. So how I got interested in all that, it was always a burning desire. But most importantly, I started listening to podcasts when I run and when I ride. And we talked to ride my bike. We talked about earlier, like Ironman training, you're training up to 20 hours a week in some of these long weeks. And so you can think about if I go on a 6-hour bike ride, listening to podcasts at 2x, like I'm just starting to pick out these little nuggets from everybody. This guy's talking about accelerated depreciation. This guy's talking about return on capital versus return of capital. And you start piecing all of this together. And so when we decided to get involved in multiple different asset classes, it was to really help our investors diversify within side of real estate. You will find more dumb millionaires in real estate than any other industry out there because it's really income coming in, expenses going out. That's essentially it. It's not rocket science. So when we find people that want to get involved with real estate, but all of a sudden have a lot of multifamily, they want exposure to other asset classes. So we made the strategic decision, okay, let's go pick out the best asset classes within side of real estate to be able to offer that and to be able to partner with our investors on those.
Fantastic. So it's really being able to, number one, have the exposure and take action, right? You can have all the exposure in the world, but if you don't take action on anything, that's right. It's very difficult for you to complain about being in the same situation a year or 2 or 3 or 10 years later, which usually if you're in the same situation, it probably means you're moving backwards because everything around you continues to progress. But just having that perspective on things, Matt, is really, really helpful, really useful, and insightful. Before we get to, because you went, as you mentioned before, thousands of units and different self-storage in a lot of different places, but I think you have your own method to things. Talk to us about what's the Fore method all about, man? I know this stuff, but the Going Long family doesn't know it. So I want you to share it. Give us some context and help us understand more about the Fore method.
Yeah. So I've got a couple different frameworks that I've put together after years of learning, reading, and also being on the bike, listening to podcasts. But I think kind of what you're going towards is I developed this model around helping investors learn how to understand any asset or any investment, and then how to justify or create criteria that says this is a good investment or a bad investment. Because I'm sure, like yourself, Billy, like a lot of people were coming to me when they knew I was interested in finance and the real estate portfolio started growing and 2020 happened, jobs were getting lost all across the board. And they were like, what are you doing with this real estate thing? How do you get involved? Should I invest in this investment? And I'd ask the question like, well, can you explain to me what the investment is? And most people wouldn't understand it. So the Fore method is really just understanding any investment. And really it's understanding the liquidity of it. So the financial liquidity of it. And I'm not saying that an illiquid asset is bad or a liquid asset is good, but just understanding like if I put money into this asset, when can I get my money back? How can I get my money back? The second is ownership. So do I own a meaningful stake in this property? And when I think about ownership, it's really debt or equity. Debt is a little bit risk adverse, and more protected, but not any upside. Equity has a little bit more risk, but you've got a lot more upside. And if things were to fail, then typically you're a second lien holder in that. And then returns. So FOR returns is really about when you get paid, how often you get paid. Some investments, you bury money into the ground and 5 years later, you get a big pop. Some investments sprinkle cash flow along the way. So you should understand how and when you get paid. And the last and most important is the effort. What is the effort going to require? What is going to be the effort required from you for this investment to be successful? Is it active or is it passive? Are you going to have to be physical, mental effort, all those sorts of things? And so the Yeti method, so that's how you understand it. A Yeti is really, how do you determine criteria for you to know whether it's a good investment or not? And the first thing I look at, the Y, is yield. So I believe yield and cash flow is the most important thing you should look for in an investment, because one, it allows you to compound, take those dollars that the asset's spinning off and throw it into other assets. But two, it de-risk yourself in your position in an asset. If you have $100,000 in an asset and they distribute $10,000 of dividends or cash flow or whatever, then now all of a sudden, technically your net position is $90,000. So you're de-risking yourself along the way. The second is equity. So Naval has this great podcast out there, How to Get Rich Without Getting Lucky. And one of the things he talks about is that you should be working for equity versus trading your time for dollars. So you want to understand, what is your equity position in this asset? Am I going to have an ability to do some asymmetrical returns? The third in the Yeti is taxes. So I believe taxes is it's the highest expense that you're going to pay for in your life. So I want to find legal ways to reduce my tax burden natively as possible. And what I mean by natively is not, I can take this strategy, and technically this is approved, so let me just jumble all this together and boom, I got a tax benefit. No, if you're looking for tax benefits, you look at energy, housing, and food. Those are the three areas where most governments have tax benefits built in already. And then the last is inflation hedge. We haven't had to talk about inflation for decades in the United States, and all of a sudden that reared its ugly head last year. So I just want to make sure that my assets, whatever I invest in, grow at the pace of inflation or higher. So that's kind of the Fore method. Helps you understand a little bit about investments. You should understand what your position is in those four areas. And then Yeti is saying yield. What do I want my yield to be? Equity. What do I want my equity to be? Taxes. Do I care about tax benefits? Do I not? How do I want to cobble together a tax strategy? And then I is inflation hedge. Do I want to beat inflation? Do I care because inflation's low that I'm not growing at the pace of inflation?
Love it, man. Love it, love it, love it. So it's really helping, and it's helpful in its frameworks. The thing is, Matt, before we get into going along final three, because we got to get there, right? I do want to ask you just one question, because especially for very busy professionals, sales and sales leaders, of course, I've got just a special place in my heart because I spent 26 years in this kind of world. You've talked about it a couple of times that it wasn't just an Ironman, it's multiple Iron. Can I say Iron Men? It's multiple Iron Men. Or, okay,
Iron Man's
Iron Man's is this kind of thing. Talk to us about how that training and competition also is helping you in what you're doing to add value to others in this facet of your life, with what you're doing, both your podcast as well as Next Level Income.
Yeah. So when I talk about real estate and kind of what we're doing at Next Level Income and Iron Man and work, people are saying, I get the comments like, isn't that too much? And I actually think because I do all three of those things in conjunction, it helps me be more efficient and more intentional with what I'm doing when I'm there. So Ironman has really helped me from a clarity standpoint. Like, no one signs up for a race without understanding I want to get to that finish line. It helps me define my longer term goals. It's helped me with consistency. So you can't wake up and do a 2-hour workout and then not do anything the next day and then say, oh, wait, I need to double my workout today to make up for it. No, be consistent with your actions. Pick little 5-minute tasks that you can repeatedly do over and over and over again every single day without fail. And you'll be surprised where you'll be at the end of the year. So it's helped me with clarity, defining a goal, consistency towards those actions, coaching, understanding that I need coaches in my life to make sure that they have an outside view of what I'm trying to accomplish. And then last, this idea of compounding. I went and raced a half marathon the other day on 2 weeks notice without really training for it, just because I'm like, man, I need to see where I'm at right now. I've got this goal of trying to qualify for Boston this year. I want to kind of understand where my body is before I enter a big training block. And it's just amazing that I didn't PR, but I was pretty darn close. I was where I was, 5 years ago when I was at the height of my training. And it's just because I continue to do little things over and over and over again that it compounds. So it's the same with investing. Define what your real goal is. Find little actions that you can do every single day that help you get there. Find a group that you can be around that can help be outside eyes on what you're trying to accomplish, that you can ask questions to, and that you can make sure that you're not stepping into unforeseen holes. And then just allow compounding to take its time. Real estate is a get rich slowly scheme. It is not a get rich fast scheme. So if you allow real estate to grow and compound over time, you'll be astonished where you are in 10 years, 5 years, 30 years.
Yeah, delayed gratification is something that, if you can hold on, it's fantastic. PR, by the way, anybody, just I don't want anybody to get left behind. So it's personal record. So meaning that you're continuing to compete against yourself. That's the thing that's important. You're always competing against yourself, not others, because Matt has gone from where he went to thousands of doors and multiple things. You have to get started. And so when he talks about his PR, his personal record, it's one of those things to keep in mind, because he's tracking against himself, and he's surrounding himself with others and being able to continue to move forward. So, Matt, I appreciate you sharing that, man. But like, here's the thing: I got to get us to the Going Long Final Three, but I never ask anybody the Going Long Final Three unless you tell me that you're ready. So, are you ready?
I am ready.
I knew you'd be ready. Plus, you already told us kind of like you're ready for one of the answers. And so, even though you're over stateside in Nashville, I'd like to bring things back to this side of the pond. Although I'm originally from Columbus, Ohio, Europe is home for me. So help us understand, what's your favorite European city that you've either visited or still on your bucket list to visit?
Yeah, I'm going to give a shout out because I bet no one has said this on the show yet, but it's Zelmsee, Austria. And Zelmsee, Austria is tucked right in the Bavaria region of southern Germany. And I did a world championship Ironman race there. Billy, the waters are so blue, you can see through them. The mountains are snow-covered, peaked, and the community there and the people are just some of the friendliest people in the world that I would put it on your bucket list if you can get to Zelmsee, Austria.
Zelmsee, Austria. And I've been here for every single episode, man, and I can tell you, no one has ever said Zelmsee. So that is number one. Good. Appreciate that, Matt, especially with the graphic, the description. Question number 2, and I'm just going to get right to the point, man. You have done lots of things. You talked about your very first property was, it worked out really, really well. You had this HVAC thing that was kind of wasn't so great, but overall it was fantastic. But I'm going to guess, because you've taken so much action, you've had so much growth, you've impacted so many lives, that not everything has gone perfectly. And so you paid full price for some lessons, for some things, right? And you made mistakes or had learning opportunities or whatever you want to call them. And I don't necessarily want you to dwell on those. I want you to dwell on what did you learn? Because if you can just think of one thing that probably hurt pretty bad, and you know that the Going Long family can kind of avoid doing the exact same thing by learning from your lesson, I would ask you that you please share that one lesson that was really, really important for you so that you can impact one, or who knows, hundreds of thousands, if not millions of lives.
Yeah, I would think it's trying to do it alone and not telling people what you're trying to do. And it's shocking to me as I continue to go down this journey, when I tell people what I do, how many are willing to offer resources or say, wow, that's really cool, and want to connect because of it. So I was very shy at first around, no, I'm just going to do the single family. I'll build it myself. I've got all the equity and things like that. But when I started reaching out to different folks, I started seeing more opportunities. Problems became easier to solve, and we got more investors in our opportunities because of it. So if you're out there on this journey for financial independence, make sure you're not doing it alone. Either reach out to people on podcasts, like cold reach out. I used to do that all the time. Cold reach out to people on LinkedIn, and just try to surround yourself with a good network to help you along your journey.
Love that. Don't keep a secret to yourself, especially when you're doing awesome stuff. Share it, because I didn't for a long time. So yeah, I love that you share that, Matt. Really, really cool. And it's okay, everybody, because I was doing it while I was working at a really, really big, large branded company. And so we're still able to figure it out. Thank you for sharing that, Matt. And then the last one, man, it's about filling our brains with knowledge. Help us understand, what is the one book that you would recommend to the Going Long family?
So I'm going to give a shout out to this book. It's called The Last Lecture. It's one I keep on my desk because my mom gave it to me when I graduated high school. But the long story short is, this guy is a professor and he's given cancer. He's got pancreatic cancer. He is going to die. And he starts the book that way. And he just talks about, but you shouldn't feel sorry for me. Here are all the things that I wanted to accomplish in my life when I was a kid. I wanted to have a family. I wanted to go to space. I wanted to be an Imagineer at Disney, and just all these different things. And he said, and I got to achieve all of them. And here are the lessons I've learned. And the most important thing is that brick walls are put in your way, not to prevent you from getting what you want. It's to make sure that you really want what you say you want. And it's a fantastic book. If you're not a reader, he's done The Last Lecture on YouTube. It'll make you laugh. It'll make you cry. It'll leave you inspired. And I would encourage everybody to go see it because it is just an amazing story.
Absolutely fantastic. So the last lecture, amazing. I'm going to add that one to my book list. So, but I'm just thinking about the very beginning of the conversation, Matt, and I cannot believe how fast these conversations fly by. And yeah, it was easy with you because like you got a lot of really cool, awesome things to say, especially when you start talking about your 6-year-old and figuring out like what else he could do. And so he goes from like realizing that he can not just work for exchanging for money, but then he can actually make his money multiply. And then from the money multiplying, he figures, wow, there's even more stuff that I can do that will allow me to get what I want, which is not really the money. It was the watch. And so going from that to talking about your experience in 2015, getting 2 cents on the dollar when you just crushed, a lot of dollars or euros or whatever. Yours was dollars, of course. But it left you also kind of feeling like, hey, listen, this is really cool, but there's also more stuff that I want to do. And so you had the good fortune of having a mentor that talked to you about what they were doing, money coming in clear, free and clear. I get tongue tied sometimes, coming in free and clear, but that set something in your mind that said, hey, listen, you don't want to push that away. You wanted to bring that idea closer and figure out how you could do it. So you started on your own path and realized like, hey, I can keep doing this. But then eventually you realized, hey, listen, I've got this day job that I really enjoy. I'm starting to create my path to freedom. How can I accelerate it? And you figured, just like you were doing in your training, that, well, you have a clear objective, start to put your path together, surround yourself with others. And while taking action, and doing that consistently, that you're going to be able to go out and massively impact so many different lives. And you're continuing to do that today with your podcast we talked about, and also at Next Level Income. So everybody's thinking, yeah, Billy, but just ask him the question, man, because that's what everybody really wants to know. Matt, what's the best way that the Going Long family can find out more about you and what you've got going on and how you are positively impacting others?
Absolutely. I'll give you 3 ways. One, definitely check us out. Ice Cream with Investors. It's a podcast on every podcasting app out there. So your gracious show host here has agreed before the recording to attend as well. So you might be seeing him pop up soon. 2, I'm pretty active on LinkedIn. So if you want to reach out to me there, send me a DM, by all means, shoot me a message. Just know I love talking about this stuff. And last but not least, you can find my calendar on nextlevelincome.com. You just go reach out to contact us and my calendar will be up there.
All right. Fantastic. Matt, listen, man, I can only say thank you. And I graciously accept your invitation. So listen, check them out at Ice Cream with Investors, everybody. And I just want to say, Matt, thank you very much, man. From the bottom of my heart, appreciate you investing your time with me and the entire Going Long family today, man.
Absolutely. Thanks for having me.
Awesome. Hey, listen, just really, really quickly, I'll wrap things up and I'll get you out of here. Going Long family, I think Matt Ford left everything. He shared his method. He shared about the Fore method, the Yeti method, and he's helping you to get clarity. He shared his story about how positively impacting others, even being able to have his ROI, intentional of being there with his son. He gave you a perfect example. Take today's conversation, repeat it, share it with family, share it with friends, talk about it. Don't just leave it as a podcast. Put these concepts into action. Heck, even reach out to Matt directly. He's giving you a way to reach out to him. So with that, while you're taking action, I'm going to be here preparing for the next conversation. So until then, go out and make it a great day. And thank you very much.